Will Bitcoin continue to drop? If you're interested in knowing more about this, please keep watching. Currently, I hold a short position in Bitcoin on Bybit worth 500,000 US dollars. You can see that the entry price is around 25,778 US dollars. Let's look at the current profit/loss. The unrealized profit/loss is over 16,000 US dollars. That's approximately over $500,000 in Taiwanese dollars. And then, considering funding rates and other factors, it's roughly just over 50,000 US dollars. If you think this profit is good, you can click the Bybit link below. Now let's look at the current Bitcoin market. Actually, Bitcoin, as we have been emphasizing, remains the same. Here we have a trend line, and the price has now broken below this trend line. You may say that my drawing may not be accurate, right? The way I draw it, this touch point has different angles and ways of connecting. Well, no problem. We use array and turn on the magnet mode to connect the points precisely. So, there's no problem with this point. The magnet mode is on. And then, we have a magnet for this point too. And after connecting these 2 points with magnets, you can see that the current market has also broken this trend line. However, when it broke, it didn't break through it with a drastic drop. Of course, the best scenario is a break with a drastic drop. But the current market hasn't shown that. Actually, the absence of it could very well mean that it hasn't happened yet. It might happen later. But for now, it's just in this area. Because the larger fluctuations usually occur at midnight in the GMT+8 time zone. Who knows, maybe tonight will bring surprises or maybe not. In fact, the market situation is similar to what we have been emphasizing yesterday and before. After touching the trend line, the market didn't experience a significant rebound and chose to break below. And in the current market, the trading volume is gradually decreasing. After the market turns bearish, this overwhelming bearish volume has not appeared. Now, personally, I believe that if we want to confirm this downside breakout, or expect a smooth decline ahead, there must be overwhelming bearish volume. In other words, we need a bearish volume that plays a significant role like this. You can see 3 touch points here. So the trend line is valid. After the price breaks through it, look at the downward movement. The bearish candle during the decline had a larger volume than any of the bullish candles during the preceding upward move. Therefore, the bearish trend has already been established. However, what the current market lacks is a bearish volume that is highly dominant. It hasn't appeared yet, but it's very likely to occur. Now let's move forward. Currently, the market has moved away from the upper range with complex oscillations. As you can see, during the upward move, there was a smooth segment. Okay. It was an oscillation here. Right after a smooth rising segment. The market above this segment, okay, involves a prolonged oscillation period. Therefore, when we are in the downward phase, we also need a longer period of oscillation to navigate through this range. Even if the market eventually chooses a downward direction, in situations like the one we are facing now, where there isn't a significant accumulation of chips, we have a better chance of experiencing a smoother decline. Now, let's open the VPVR to observe the chip accumulation. Which part has the highest accumulation of chips? It's here. At this point. Additionally, there are accumulations here, here, and here. These areas have significant chip accumulation. Let's take a look. The topmost area now acts as a cushion for short positions, making it difficult to return above the white line, because many transactions were done there. However, if it moves downward, particularly from 26,500 to 23,000, I believe there is a better chance of a smooth decline. At least compared to the previous decline, there is a higher probability of a smoother downward movement. This is because the chip accumulation in this area is not as dense as before. Look at the same areas. Is the chip accumulation as dense as it was before? No. Now, look at the lower levels. Specifically the range from around 22,000 to 17,500 US dollars. I believe that if there is a further decline, the market will likely experience a smoother drop here. This principle applies similarly to previous market trends. Why is that so? When we observe a rapid and smooth decline, it indicates a lack of significant accumulation of trading volume. In such cases, the price tends to move quickly within the same range. Let's take an earlier case as an example. During an upward trend here, the price also rises swiftly. There is less chip accumulation. The price tends to move quickly. During similar market conditions and price ranges, whether it's an upward or downward movement, it tends to be smoother in such situations. Also, when there was turbulence or oscillation in between before, it can lead to more fluctuations before a downside breakout occurs. Therefore, you can see that this concept aligns with previous market patterns. Let's zoom in further to a smaller time frame. Upon closer examination, you'll notice that there is a range above us. If the price breaks below this range, returning to it will be highly unfavorable for the bearish sentiment. Consequently, if you currently hold a bearish position, you may consider placing your stop-loss order at different positions along these white lines, based on your trading time frame and risk preference. Now, let's shift our attention to Ethereum. Ethereum's price decline appears more clean and more precise than Bitcoin's. Why is it so? Well, let's mark this line as well. When the price broke through the line, it formed a large bearish candle, dropping by a significant 5%. This is a much sharper decline compared to Bitcoin. Bitcoin's price decline wasn't as drastic. As you can see here, wait a minute. Let me connect them. When Ethereum was falling, it also broke through an important range at the top. This level here. As you can see, it attempted twice to break out from the range. The first and the second here. Both of them failed. The price chose to break below it. So, we have a defined upper range now. In the overall picture, the key level for Ethereum is around $1,800, specifically between $1,790 and $1,800. Ethereum clearly broke below this level. However, I would like to see a significant volume to confirm the current situation further. If you're interested in trading and would like to give it a try, you're welcome to click the Bybit link below the video. With just KYC verification and a $100 deposit, you will immediately receive a free Bitcoin contract position worth $1,000. This means you can claim a risk-free position without risking your own funds. You can go long or short, and the position will be open for you. It's a real position. You can close the position if it's making money. If you incur losses or get a margin closeout, it doesn't matter, since it is a gifted position. Click the link below for more information. Alright. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.